Hello. Well, 2019, or at least the bulk of 2019, has been a year in the FX market where the US dollar has generally proved to be largely preeminent. Now, that perhaps might surprise some when you consider, of course, that this year has seen the Federal Reserve cutting rates, not just once, but on three separate occasions. And despite all of that, we've seen the US dollar continuing to perform well, largely due to its safe haven premium, and particularly in view of the yield available relative to elsewhere, in particular in terms of Europe, where we've seen a preponderance of negative yields. But the question is, how does that play out into 2020? Is it going to be another year when the dollar remains relatively ascendant, or is it going to be the time when we are going to see the dollar cheapening up and we're going to see the rise or the re-emergence of growth in other currencies? Well, from a CIBC perspective, we do assume that the US dollar will cheapen up through the course of 2020 for a multitude of reasons. One is the fact that the growth trajectory will be a little bit slower. Another is the fact that there is going to be increased political risk as we run in towards November's presidential election. And no doubt into that election, we will see ongoing pressure from the White House in terms of easing policy or pressure to ease policy on the Federal Reserve. But also, I think there are important factors to keep in mind, in particular the continued deterioration in the fiscal trajectory in the US. And I think that has some important implications for international fund flows, and particularly from those current account surplus nations. So in that regard, I'm thinking particularly in the G3 perspective of the Eurozone and in terms of Japan. Because I think in the case of both of those economies, there may well be a generalized reluctance or reduction in terms of those capital flows flowing towards the US. And so that takes away some of the momentum from the US dollar, and it also mitigates some of the selling pressure from the euro and the yen in the course of 2020. But I think, of course, it's all about the domestic dynamics that I think are going to be more relevant in the course of the year ahead. And I think we're most likely to see the trough of this global economic cycle probably coming in the first quarter of next year. And through the course of the latter stages of 2020, if we don't see a re-escalation in terms of those global trade tensions, then I think we will see a much better global backdrop. And that, of course, will encourage those risk-orientated currencies a little more. And, of course, it will also have an impact on those that are export-orientated. And in that context, Germany comes into focus very particularly, because roughly 50% of its GDP comes via exports. So if we are going to see improved global trade dynamics, then I think that is and will be encouraging for the euro and will provide a degree of endogenous growth in the Eurozone in 2020. I think we will see less impetus or pressure from the European Central Bank to consider additional monetary easing. And indeed, I think it may well be the case that over the course of the next year or two, the ECB will be following the example of banks like the Riksbank and taking rates back towards the zero level. So I think it is going to be the case that the euro is going to have better growth potential. I think we will see less capital outflows, and I think there will be less discussion or fear of additional policy stimulus from the ECB. So I think as a consequence of all of that, will provide a much better backdrop for the euro next year, and we can see the currency rallying to maybe the upper teens and perhaps even as high as 120, although I think that might be a little ambitious at this particular juncture. Now, of course, in terms of Japan, how does that play into the Japanese yen narrative? Well, I think, of course, we've seen the combination of very expansive monetary policy, but also we've seen another significant fiscal injection to try and deal with the impact of the consumption tax hike, but also the natural disasters that have also hit the Japanese economy over the course of the last quarter or so. Now, I think if we are going to see that better global trade backdrop, then I think the endogenous growth potential in Japan will also prove to be rather better next year. And I think the market will continue to pare back expectations of monetary policy stimulus from the BOJ. And so again, in conjunction with those capital flow arguments, I think that provides a better backdrop for the Japanese yen through the course of next year as well. So I think we can see a move back towards the low 100 area in the context of the Japanese yen. So in terms of those other global currencies, then I think Australia and New Zealand will continue to perform well. I think the Swedish economy, which is very orientated with what's happening in Germany, will also prove to benefit. And so in the global or the G10 space, that really leaves sterling. And of course, that really is a function of how the Brexit dynamics play out in the course of next year. Sterling, I think, will end next year higher than this year, but I think there will be considerable volatility once again as markets continue to discount or reprice the risks or probabilities of hard exit as the negotiations in terms of the trade backdrop play out through the course of the year ahead. So sterling's fortunes, I think, will look a bit better, but I think it is going to be a very uncertain and volatile period for sterling in 2020.